In this video, I want to talk to you about business capital advances. So if you're a business owner and payroll's due Friday and cash is tight, you've probably seen that ad that popped up on your screen that says, need $50,000 fast, get approved in 24 hours and no credit check. You probably click it, they'll call you, and they promise that funds are going to be delivered by tomorrow morning. You see, that's what's called a business capital advance, or sometimes referred to as a merchant cash advance. Sounds like a lifeline, but in reality, it's often the start of a slow financial bleed in your organization. Let me explain why these quick cash advances can ultimately quietly destroy your business's success. So a business capital advance isn't technically a loan. The provider says that they're buying your future receivables. Translation is you get a chunk of cash now while agreeing to pay back a percentage of your future sales plus a hefty premium. For example, say you advance $100,000 at a 1.4 factor rate. That means that you owe them back $140,000, which is 1.4 times 100,000, in, let's say, 6 months. And so at the end of that 6-month period, if you were to pay back that 140,000, that actually equates to like a 60 to 100% interest rate per year or more. Then when you compare that to a regular business loan where typical rates can be 6 to 12%, you can see right away the big difference in the hidden factors that they like to hide behind. Well, it's not typically a loan, but we're just going to give you future money. And so if you don't understand the factoring, it can truly cost you in the end. So here, let's play this out in real life and let's build a real life scenario. So let's say you had an MRR of $120,000 and you wanted to take out that $100,000 factored loan at 1.4 factor, which means you're paying back $140,000. Now, if you need to take out that $100,000, even with $120,000 MRR, you're probably tight, which means you probably either have like a slow cash receivable period or your expenses are too high, etc. But just keep that in mind. If you're already making 120 and you're only taking out 100, how this could potentially impact your business. And this could be saying that, 10,000. If you take a $10,000 at 1.4 factor, it's still going to be kind of the same role. But typically what will happen in these scenarios is they'll give you the 100,000. They'll tell you that, hey, you need to pay us back 140. It's not a loan because there's no interest. It's just a factoring of your future revenue. But what they'll do is they'll say, well, here's our holdback. So we're going to take 15% holdback. And what that means is that every day or, every week, typically they're going to say, of your 120,000 that you bring in, you need to pay us 15%. So in this case, you're going to pay $18,000 a month payment on this factored loan. Now remember what I just said is if you're already tight on 120 grand because you need to take out the first factor, can you then operate on $102,000 net? And if you can't, then you can already start seeing how the spiral starts to occur. So this is what you're left with to operate. And in this case, it's not just like for 1 or 2 months. At $18,000, it's going to take you 8 months to pay off that $140,000. It's about 7.8 months, right? Is what it comes down to pay off that $140,000. So for the next, if you're taking $100,000 now, or 10,000, because you got a $12,000 business, whatever it is, can you for the next 8 months afford to pay 15% away? And if not, you can start seeing how these things can start spiral you out of control. And another thing, right, would be, what if your business is seasonal? What if 2 months later, instead of 120, you're now at 80 because you got into your slow season. Well, now they're still going to take 12 grand from you. You lost $40,000 out of your cash flow inflow, but they're still taking 12. So they only lost $6,000 in your payment, but you lost 40 at top line cash flow. So as you can start seeing that, as you're paying these payments month after month after month, it actually shows that when you do the math, the APRs for these end up being over 100%. And you're paying a huge cost and you're sacrificing operational flexibility. Now, don't get me wrong. Sometimes there are situations where you need to take one of these advances, but it should be because you need to invest in something quickly that has a guaranteed or a pretty high success rate of guaranteeing an ROI for your business. So now let's talk about the spiral. So once you start and the drain starts on your business, so you start making these repayments, many business owners actually have to take a second advance just to cover the first. There's so many reasons why they typically say, once you've paid us back 50%, you can take out another one. So in the scenario above, let's say you took out the 100,000 and you need to take out another $50,000 advance, but this one, they gave you a 1.3 factor, but you still owe $65,000. So now you've got two different repayments that are happening at the same time, unless they paid off the first one and refinanced it. And maybe they're taking 15 for the first one, and now you got 12% for the second one, maybe if you didn't get it at two companies. You can now see how your business is now not looking to serve just your customers and your employees, but you're actually now starting to just serve the lenders at these alternative lending companies. And the market backs this research, right? The MCA alternative funding market was valued at about $17.9 billion in 2023, and are projected to reach around $32.7 billion in 2032. And this is from valuecapitalfunding.com. Volume is high because the trap is all too common. But volume is not the same as a healthy growth. This growth isn't because it's a healthy market. It's because they're preying on organizations, businesses like you, if you're considering this type of funding, because once they get their teeth in you, you're kind of stuck to them. As I said, are there occasions where an advance might make sense? Absolutely, yes. If you have a guaranteed high margin contract that maybe is coming in the next 30 to 60 days, and you just need that short term cash injection to get things going, and your cycle is well controlled, it might make sense. But most situations are not that neat. They're not that set up. You're borrowing from your future success to try to cover a today problem. And then that future that you're hoping for becomes compromised. If you're trying to borrow today to pay for expenses that have already occurred or cash flow issues that are already in place, then you're looking at it the wrong way. If you have a weak cash flow system, a alternative business capital advance or whatever they want to call it, it's not going to fix your problem. It just hides them. How can Profit First help you? And here's the approach that we focus on with Triumph Business Solutions and why we're different. So instead of draining your revenue before you see it, when you set up a system of cash management, you begin to allocate your funds intentionally. So if you have direct labor costs, you can direct money once it comes in into your labor and your payroll account. You direct it into your profit, into your tax account, and then to your owner's pay account, so that you make sure that you get paid appropriately. You're setting aside and building cash reserves for those unexpected expenses that will inevitably arise in any business owner. Then at the end, you have your operating cash left. This is the money that you use to run your operations. It gives you control, it gives you predictability, and it gives you a stable rhythm. Now, if you haven't implemented it, we understand you're probably going to have to take some time to look at your expenses, look at your situation, improve sales, improve your pricing margin, make some cuts on your expense side for things that you don't need, and ultimately improve your margins to get you to probably where you need to be. But borrowing is never going to get you there. And also, borrowing using alternative methods is almost never going to get you there. So in contrast, the advance says, take speed now. trust us to pull from your future. We'll give you the money and then you just pay us back when you can. That's not what we want you to do. With Profit First, we say build your stability first, then growth. Only one of these focuses leads to long-term success. And I'm going to bet that it's not the advanced business MCA model. So when someone offers you that fast funding, take a minute and remember, speed can be useful. That helpful hand, it can be useful today. But when it comes with a factor rate that ultimately translates into 100% or more effective interest, that's not speed. That's an anchor to them as a lender. So if you're under cash flow pressure, you don't need high interest solutions. You need better systems that help you keep more of what you already make. You need to take a look into what's happening into your business and maybe look at ways that you can move money around, delay some invoices or some expenses that you have to pay, and find other ways first to ultimately help and stabilize your business before you go to an alternative funding solution. So Triumph Business Solutions, that's why we partner with our clients to help them build every single day. Predictable, sustainable, and profitable growth within their business with a system that can help them plan for the future so that they don't need to take any of these alternative funding solutions that ultimately will end up destroying and sinking your business. So if you're considering in advance, or maybe you already took one and you feel trapped, reach out. Let's have a quick conversation, and it could save you months and months of stress. Ultimately, once you put a plan together and you begin to model out the solution, you begin to see the truth, and that is that maybe it's not your best choice to take an alternative MCA loan or ultimately what they call a business capital advance. Remember, it's not a loan. We're just giving you some of your future money. We're just going to give it to you now. Until the next one, I hope you all have a great day. Do all that fun algorithmy stuff, and we'll see you in the next one.